Okay.
Hello, ladies and gentlemen. Welcome to another edition of Capital Concepts. I'm Jeff Schuler, Director of Research and Chief Analyst here at Spiker. In this segment, I'd like to discuss not only gold, but also the concept of inflation and the dollar. More than anything else, the drop in the value of our currency has been gathering not only momentum, but also attention. And there's a lot of pressure now on Mr. Bernanke to start raising rates to help combat the drop in the value of the US dollar. But what's being addressed is almost a side note, because it's the US dollar in relationship to other currencies and not simply the erosion of the buying power of all fiat currencies. And that is something that I think is a far bigger problem than simply the rise or fall of the dollar versus other currencies that really are not much different when you look at it than the dollar, because they're all backed by nothing. They're all simply paper, and none of them really have any ties to something substantial. They are symbols of purchasing that are backed by the growth of those economies. And if those economies are vibrant and robust, well, then their currencies can be more vibrant and robust, but it's still a facade. It's still smoke and mirrors. And in a previous clip, I went over Thomas Jefferson's quote, which I happen to love, and I have it here somewhere in my stack. Ooh, yep, here it is. Paper is not money. Paper is a ghost of money. Paper is poverty. Thomas Jefferson. But there's more. And I was looking at some Keynes, John Maynard Keynes, and going into a little bit of economics, and I'm not going to bore you, but I'm going to get through this. By a continuing process of inflation, governments can confiscate, secretly and unobserved, an important part of the wealth of their citizens. There is no subtler, no surer means of overturning the existing basis of society than to debauch the currency. He also went and said, Lenin is said to have declared that the best way to destroy the capitalistic system was to debauch the currency. Lenin was certainly right. The process engages all the hidden forces of economic law on the side of destruction, and it does it in a manner which not one man in a million can diagnose. That's what we've got going on today. We have a systematic erosion of the value of our currency, and we're seeing an acceleration of that process. And everything that our government has been doing, this administration, since taking office, has been twofold. One is to move away from capitalism and to socialism in the acquisition of different companies and taking over, basically, different industries, putting their fingers in the game. But also this destruction, this monetizing of debt is purely and unequivocally destructive to our economy. I don't necessarily think that they are purposely trying to do ill. I think what they're doing is what they consider their best efforts to keep things going and push out the inevitable collapse of our current system. And I've mentioned many times before, the difference between now and 1929 is back in 1929 they were only buying stock on margin. Now they're buying derivatives way out of margin, at 100 to 1 and more versus 10 to 1. And they're derivatives instead of stocks, and we have now no gold standard. Back then we had a gold standard. But I was looking also at some talk about gold. And gold has been pushing higher because it's no longer just a hedge against commodity inflation, it's also a hedge against a change in world standards. The dollar is constantly being debased and inflated, and by 2013 this guy's looking for 8,000 an ounce. We'll see. When the economic outlook has improved sufficiently, we will be prepared to tighten. Ben Bernanke. There's more. If the methodologies of measuring inflation in 1980 had been kept intact, gold would have to hit 7,150 to be equivalent of the 1980 record. That's about $1,020 an ounce. The world's money supply has increased. Gold hasn't kept pace. Gold is not in any peak. in today's dollars, just going back 10 years, gold should be $22.87. It has not kept pace with inflation. We're now in a period where gold is catching up. The point I'm trying to make is that gold has a tremendous way to go, no matter how you look at it. And that there are two reasons for investing in gold. One is to protect yourselves, and that is to make sure that you have real money when paper loses its value. If you're retired, if you're conservative, if you have large assets and you need to protect those assets, that's why you go into gold. Another reason is to make money. And right now we have I don't want to call it a runaway destruction of our currency, but it's pretty close. And we have a Fed that is between a rock and a hard place. It can't raise rates without crushing, absolutely just crushing, the already devastated real estate market. If it does that, it's killing the banks, and again, we're done. If it doesn't, then the dollar keeps sliding. Short term, that's good for stocks, I guess. It seems to have been, especially with companies that do so much business overseas. Long term, it's systemically bad. And the bottom line is that if you want to make money, given all of the problems that we have economically and with the debasing of the currency, not inflation, then you own gold. You buy gold, you buy bullion. Don't mess around with ETFs or mining stocks. The way you make the most amount of money with the least amount of risk is in bullion. The information's right down here on how to contact us. We'll help you out in doing that. And to me, there's no question about whether or not it's going higher. The only question is how fast, how soon. But the one concept that I'm really trying to drive across is that if you are looking at the reason for the dollar going up is because the US dollar is going down versus other currencies, it's missing the picture. That's not why it happens. Because otherwise we wouldn't have gold setting records in these other currencies as well. It's going up in every currency, not just in the dollar. The other thing is, and this is one of the things that struck me, and it reminded me of something, that back in 1980, our government had one way of measuring inflation. Today, it has a different way of measuring inflation. Our government, and all governments do this, they use what statistics suit them best to do what it is they want to do. Why would you change how you measure inflation if not for your own purposes? If gold were still measured in the way inflation was measured back in 1980, it should be $7,150 an ounce. Gold is there as a hedge. Now, gold also has been artificially depressed over the last 20 years by short selling by our central bank for this reason, to help prop up the dollar artificially. That game is at an end. I can tell you without a shadow of a doubt, at this point in time, that there are countries and economic entities out there looking to back their currencies with gold. The game is over. It is only a matter of time. The question to you is whether or not you take advantage of it, protect yourself, and make some money at the same time. If you'd like to learn how we do it and how we can help you out, just go to the bottom, right over here, website, phone number, give us a call, check us out. It's easy, and we'll get you some more information. Now, ladies and gentlemen, I hope I've made some headway in this segment. I know there's a lot to go over, and economics can be boring, and it can be a great soporific when you need to get to sleep. But it's important, and the facts are the facts. And if I've done one thing, I hope to get the message across that what you're being told on the major news networks may be the truth as they see it, may be the truth as it's being presented, but it's not the truth when it comes to what's important to you, and that is making money and preserving your wealth. The truth is, inflation is not what they say it is. Gold is not a protection against inflation. Gold will go up because it is a protection against uncertainty, Is it protecting against change? Is it protecting against economic calamity and the destruction of a currency? It is wealth preservation. It is money. That is the truth. That's what's important. Nothing else really matters. The rest is window dressing. Ladies and gentlemen, I hope you enjoyed today's segment of Capital Concepts. I hope you have an absolutely fantastic day. And until we next meet, may God bless you all.